Despite the lockup and inflation difficulties, Tesla earned $16.9 billion in revenue during the second quarter of the year, according to financial experts. According to Ross Gerber, the quarter highlights Tesla's prospects for long-term production growth. Tesla Bull thinks that Tesla is one of the businesses with the biggest prospects, in addition to being the most innovative and fascinating one in the world. He referred to Tesla as the king, holding more than 12 allocations in his fund, in his own words. Hey guys, glad to see you back. Tesla shares with the highest profit margin in the entire automated industry. Tesla is already in a dominant position. The car company generated $53.8 billion in revenue and $6.5 billion in operating income in 2021, which is significantly more than what was achieved by major rivals Ford and Rivian. The Gerber CEO, given that the automaker has an even higher profit margin that qualifies it for these market opportunities and will likely have more, it is very true that Ross Gerber of Kawasaki Wells Investment believes that Tesla is well positioned to utilize the opportunities that are available to it far better than any other electric vehicle company. So why does Ross Gerber believe Tesla is unbeatable in the EV industry, and how bullish is this Tesla stock? In a recent video, Ross Gerber stated that he has become more bullish on Tesla and has more epiphanies about the company than ever. Gerber attributed this to a number of factors, including climate change-related investments made by Tesla, which he believes could increase the company's profit margin and reduce its production costs. The new Inflation Reduction Act prompted Tesla to start making additional batteries in the United States, and this is one of the key initiatives that might fuel the company's expansion. Tesla intends to cease construction on the Gigafactory's battery section in Berlin and relocate it to the U.S. Following the announcement of the $7,500 tax credit for electric vehicles, which mandates that some essential battery materials be harvested or processed in the U.S., this has happened. Gerber believes that while Tesla's monthly and Texas facilities can aid in the country's automobile manufacturing, a battery facility will provide it a competitive advantage in obtaining the tax benefits that have been announced. What does this imply for Tesla's investors and customers? As battery production rises in the U.S., stay tuned to discover out. Using the tax incentive, Tesla can produce more cars at a reduced cost. Tesla now has the greatest industry leverage for cost reduction and has the capacity to continue doing so. Regardless of the state of the market, Tesla's production costs will drop as the company continues to release more vehicles. Gerber asserts that the tax credit has the potential to lower Tesla's cost per vehicle, which will result in cheaper car prices and ultimately higher business profits. The fact that Tesla is already making record-high profit margins suggests that battery subsidies are simply the cherry on top. According to the Inflation Reduction Act, loan access will be possible by 2026. A country with which the United States has a free trade agreement must provide 80% of the necessary materials for vehicles, and Tesla is already looking into this possibility. The automaker recently revealed plans to invest in the mining of raw materials like lithium and nickel, and if Tesla is successful in doing so, it can further strengthen its case for the tax credit. Gerber said that Tesla's supercharging network is one of the drivers for generating strong profit margins, particularly given that the automaker is working hard to make its charging capabilities available to people who don't own Tesla vehicles. Automaker revealed earlier this year that it is developing a new supercharger membership to give non-Tesla EV customers access to its network in the U.S. The shift is anticipated to be made by the end of the year. According to the news, Tesla is getting ready to expand the network in North America by developing a new CCS adapter for non-Tesla EV owners. Tesla provided a pay-per-use option and a subscription plan that costs 99 cents per month on its app. The information offered Tesla balls a conviction that the firm is continuing on plans to extend its supercharging network, even though Tesla quickly removed this option from the app. Additionally, Gerber expressed confidence regarding the American subsidies for charging stations, stating that even though he is unsure if Tesla has gotten these subsidies, he thinks the automaker will. The Biden administration outlined its intention to allocate roughly $5 billion over 5 years to construct thousands of EV charging stations in February of this year. This was done in an effort to persuade Americans to stop driving gas-powered vehicles. The government plans to create 500,000 new EV charging stations by 2030 and wants 50% of all new cars sold to be plug-in hybrids. The period of energy abundance is anticipated to arrive at a point in the future when energy is so clean and abundant that limiting use will be wholly superfluous, according to new research by Austin Vernon and Eli Dotto. If this period of extreme energy abundance materializes, according to Gerber, Tesla might be able to offer supercharging services for nearly nothing while still making a tidy profit. Tesla already boasts the world's fastest supercharging network, and this will only lead to further expansion. Although the value of Tesla's supercharging network has not been properly evaluated, according to Gerber, it may be worth $20 billion, $30 billion, or possibly more. This element is now being taken into account by a number of stock experts when assessing Tesla. Additionally, it is reasonable to assume that other EV manufacturers will follow Tesla's lead given its apparent dominance of the supercharger network. Hunter eventually requested Tesla to offer supercharging options for their electric vehicles. Tesla is gradually turning into the only rated supercharging network and will eventually be when it opens up this facility to non-Tesla EV owners, allowing those on road trips to travel longer distances to easily charge their cars. This is similar to how they are likely to use Tesla's autonomous software in the future. This will not only make it easier for Tesla to observe greener energy, but it will also considerably raise the value of Tesla. When the Cybertruck was first announced, Ross Gerber said that this was an innovation that would be widely accepted by a lot of people, and that, despite Ford and Rivian having released their own truck models before Tesla, the Cybertruck would eventually take over. He added, "I've become widely in love with Cybertrucks, and I am now fully convinced that electric vehicles will be adopted by truck drivers because they love electric vehicles too." The majority of people didn't fully embrace technology, but it appears that things are changing. However, there are many reasons to believe that the truck industry will be the next big thing, and the Cybertruck, which is hoped to arrive next year, will be a significant milestone in Tesla's new push into the trucking industry. The Cybertruck's 4680 battery cells, which Tesla unveiled in 2020, may be one of the main reasons for the release schedule slowdown. Tesla said that this enabled the creation of more affordable and long-range electric cars. All upcoming electric vehicles, including the Cybertruck, were expected to run on the proceeds of these sales. Panasonic sent Tesla 4680 battery cell samples earlier this year before the manufacturing giant began mass-producing the new battery, and it appears that production has begun, but not at a particularly large scale. Gerber stated that these battery cells are going to be developed and that they will change the game for Tesla. It's similar to the first time Gerber's optimism about the 4680 battery cells was expressed in public. The 4680 cell project, according to the investing expert, is the most important thing Tesla has ever accomplished in terms of battery technology. According to some reports, Tesla can use this kind of battery cell to produce EVs that are 7 times more efficient than conventional vehicles. This ball thinks that Tesla's stock worth is determined by a number of other developments in addition to its cost, all of which contribute to its valuation. Although new electric vehicles are entering the market, it is reasonable to suggest that Tesla may see reduced sales and profit margins. However, since these EV manufacturers do not enjoy the same cost advantages as Tesla, this might be quite challenging. To compete with Tesla, which is currently addressing practically all of the key aspects of the switch to sustainable energy, will take a lot more. Gerber asserts that there are dangers and a chance that something could go wrong. These dangers are what make Tesla such a great company. What do you think of Gerber? Can Tesla keep raising its profit margin? Inform us. Don't forget to share your opinion of Tesla in the comments section below. Go ahead and click on the next video on your screen if you're interested in learning more about what Tesla has been up to. Hello there.